Sir, shall we commence the meeting?
Yes, sir. Yeah, please, sir. Please.
Sir.
Sir, start பண்ணீங்களா sir?
Yes, sir.
Chairman sir, I think he has some problem with connectivity. He is being disconnected.
Santosh sir.
Sir,
Sir, good evening, everybody. On behalf of the Erode branch of all the members, I wholeheartedly welcome the today's speaker, C. Ramprasad from Visakhapatnam, and also all the senior members, past chairman, and all friends of the profession. I wholeheartedly welcome this good evening for this discussion on tax audit, a topic which is currently we are all focusing to complete our tax audit assignments. Virtually, we can call it a tax because of the COVID situation, availability of the staff on one side, and also the support from the clients on the other side. Apart from that, the income tax side itself, which is putting us a very, very tough challenge to file each and every return in this tough situation. I really happy to invite all the members to participate in this discussion. And I take this opportunity now to invite our secretary, C. Santosh Kumar, to introduce our speaker to our August audience and the branch.
thank you, Chairman. A warm evening to all the members and speaker. He is a fellow member of our institute. He has over more than 11 years of practical experience handling litigations and providing opinion in areas of direct taxation, including matters related to non-residents. He deals in advisory in tax matters related to non-residents, DTA related issues, and transfer pricing. He is a speaker on direct tax matters, advisory in litigation under income tax, including prohibition of benami transaction. He is a faculty in ICMAI and ICAI branches. I am very glad to introduce today's speaker, C. Ramprasad, to this audience. Thank you, sir. Sir, the floor is yours.
Sir, yeah. Yes, Chairman, sir, you are saying something. Thank you, Erode branch, for giving me an opportunity to speak on the tax audit. Generally, we call it as this is a season for tax audit. I sincerely thank everyone who is participating in this program. And I welcome all of you, and I expect all of you to be participatory in nature, in the sense that if you have any doubt or if you have any query with regard to what we have discussed or what we are going to discuss, anything regarding the tax audit, you can pause me and you can ask me a question. I am very much comfortable in answering the questions there and there itself. You need not wait till the end of the session. That I expect all of you to participate, in the sense that because we know what is tax audit, how it has been done for the years, because there are so many seniors who are participating in this program. So they know from 1984 to till late what are the changes that is happening and what are the expectations of the department from the perspective of the tax audit. So if you have any query in between, you can absolutely, yeah. So absolutely, sir, am I audible, sir? Am I audible? Somebody is saying that audio.
Yes, sir. Yes,
yeah,
sir.
perfect. Thank you, sir. So if you have any query, you can put in the chat box, or you can ask me while pausing my presentation. I am very much comfortable with either of the things. So let us start the session very, what exactly we know about all about. Okay. So we know who are subject to tax audit. Away from the shared application, I think. Yeah. So who are subject to tax audit? We'll start. Sir, can somebody help me how to remove this, sir? It is appearing again and again.
I think you have opened some window.
No, I have not opened anything, sir. This is the only window I've just opened it.
So that thing which is coming, it's not in your system.
So you could see this presentation clearly, no, sir, without any, without
No,
any.
there's a screen appearing. It's
Yeah.
saying that please move this window away
Yeah.
from the shared application. I don't know.
Sir, now it is clear, sir.
Now it is clear, sir.
No, that window is appearing.
Yeah, window is appearing. Yeah, that's what.
Yeah. I don't know why it's appearing. Satish.
Sir, our screen share off need modification share panel, sir. Sir, Ramprasad sir, once you just stop share the screen and you just share the screen again, sir.
Okay. Okay, sir. I'll do that. I'll do that.
Okay, sir.
Just give me a minute, sir. Now, is it okay, sir? Sir, now is it okay?
Yes, sir. Yes, sir. Now it's okay, sir.
Perfect. Thank you, sir.
Yeah.
Sir, sorry for the trouble, sir. Now we will first discuss about the persons who are subject to tax audit. This is a very, very important area. There are changes made in the Income Tax Act who are subject to tax audit. Okay. So the first aspect of it is that those who are doing carrying on business, again, for the purpose of subject to audit, there are two aspects to it. One is the SSE who is carrying on business and the SSE who is carrying on profession. Now, from the last 2 years, 2 or 3 years, there is a new provision has been added for persons who are carrying on profession. There is a separate category with regard to the presumptive taxation as far as professions are concerned. Earlier, we see only the presumptive taxation was okay. The audio was not clear. Is it clear now, sir?
Actually, the audio is clear.
Yeah.
I think there will be some connectivity problem with that.
Yeah. Okay. Chandramodi sir is saying that it's gone on. Okay, fine.
Yeah. Something somewhere connectivity problem will be there, I think.
Yes.
Yeah.
So let us come back to the persons who are carrying on business. Till now, the provision says that if your turnover is crossing 1 crore, if a person carrying on a business, and the turnover from the business, turnover or sales or gross receipts, whatever we call it. So if the turnover crosses 1 crore, then they are subject to tax audit. Later on in 2019, they have introduced one more criteria. They say that if you do more than 95% of the transaction, 95% or more of the transactions in other than cash, in a mode other than cash, then the limit is 5 crores. So thereby, if I do say 98% of my transactions, I do it through banking system only, not in a cash. So in my case, the turnover limit for getting books of accounts audited under 44 AB is not 1 crore, it would have been 5 crores. Now that 5 crores limit has been extended up to 10 crores with a rider that The transactions means both the payment and as well as the receipts should not be in cash. So you can have up to 5% of the total receipts and payments, total out of total payments, up to 5% of the payments you can have in cash. In the sense that you are having 95% or more of the transactions are carried through banking channels, then you have a limit of 10 crores. That means if I do my both the receipts and as well as payments through banking channel, and my turnover limit for getting books of accounts audited is not 1 crore, it is 10 crores. So if I do 98% of my transaction, both the payment and as well as the receipts through banking system only, then my turnover limit for getting books of accounts audited is more than 10 crores. So if I have a more than 10 crores turnover only, then only the books of accounts are required to be audited under the Income Tax Act. Now, initially, the provision is so drafted. It says that in a mode other than cash. Later on, they made a change that it is not exactly the normal banking system. It should be done through account pay check or directly to bank account, in the sense that you can do it electronic clearing system through net banking, RTGS, everything you can do, but it should be account pay only. You cannot, if I receive something in bearer check, then it is equivalent to transaction in cash. This has been clarified recently. So if I get any payment or if I give any payment in a bearer check or other than account pay check, it is also equivalent to be cash. It is a transaction equivalent to cash. This is only for the purpose of deciding whether what is the limit for tax audit, nothing to do with any other provision. This is only purely with regard to deciding whether you are subject to tax audit or not. Now, one question arises. Now, they said that the receipt and as well as payment should be less than or exactly 5% of the total receipts. Now, what is a receipt here? Is it only the turnover? The answer is no. The section says that it is total receipt. So it could be anything. It could be income from it could be anything. It's not necessarily the only limited to sales or turnover. So if I make a repayment of a loan in cash, then that is also considered a part of the payments. So don't be under the impression that only the payment means only the expenditure, or only the receipt means only the sales or income from profession. No, this is not only limited to the business transactions, or is it revenue nature, is it a capital nature? Everything is absolutely covered, because they use the word payment. They have not used the word payment for expenditure or payment or receipt towards sale. No, they have not used like that. So any payment, we'll see all the payments and see what is the nature of how it has been done. It is done through banking account or through cash. Accordingly, we decide what is the turnover limit for the tax audit. And if I'm going for a presumptive base of taxation, there is one more criteria, that presumptive taxation 44AD. Earlier, if we show if we offer our income under 44AD at the rate of 8%, then there is no audit. But if we show less than 8%, there will be a tax audit. Now that has been changed. Now that has been changed to such a way that once I started offering my income under 44AD, I have to continuously offer my income for the next 5 years under 44AD only, as long as my turnover doesn't exceed 2 crores. I have to offer my income only under 44AD. So once I start offering income under 44AD, I have to continue to offer my income under 44AD only for the next 5 years, as long as my turnover doesn't exceed 2 crores. But if there is any break, in the sense that 1 year 44AD, second year is also 44AD, but third year I am not offered under 44AD, then automatically you have to get your books of accounts audited for the next 5 years, irrespective of the turnover. irrespective of the turnover. So current year you have opted for the 4480, and for the last 5 years also you have continuously offering your income under 4480. Then if you cross your turnover more than 2 crores, then only you are subject to tax audit. So what I'm trying to say is, once you offer your income under 4480, you have to continuously offer your income under 4480 for the next 5 years, as long as your turnover doesn't cross 2 crores. The moment your turnover crosses 2 crores, then you are automatically out of the section. So there, this exception doesn't apply. But one aspect you have to consider is, in case of an individual or HUF, not only if you are, last year you have opted for 4480, current year you are not opting for 4480, then it is mandatory on your part to get your books of accounts audited irrespective of turnover, but your income should be more than basic exemption limit, that is more than 2.5 lakhs. So you have to have, you are not offering your income continuously for the last 5 years under 4480, plus your income should be more than basic exemption limit to cover under tax audit under 44AB. Yeah. So now going back to, there is one more criteria which is called 44AE. This is purely the persons who are carrying on, you are in the business of transportation of goods. Here also there is a presumptive, there is a deemed income which has been prescribed under 4480, depends upon the capacity of the carrier. And if you are not offering your income as per 44AE, that means 44AE says that you should not be owning more than 10 vehicles, then you are covered under 44AE. Now, if you feel that your income is less than the deemed amount which is mentioned under 44AE, you have to get your books of accounts audited irrespective of turnover. And here, in this criteria, even if the SSE is an individual or HUF, even if his income is not crossing basic exemption limit. Earlier, we have seen that if you are covered under 4480, you have to continuously offer under, there is a break for 4480, and your income is also exceeding basic exemption limit, then only you are subject to tax audit. But when you are carrying on a business of 44AE, you are not offering your income as per 44AE, then automatically your books of accounts are required to be get audited irrespective of the turnover and irrespective of the fact that whether your income crosses the basic exemption limit or not. So here basic exemption limit criteria is not at all is relevant as far as if you are carrying on a business of 44AE. And if your SSE who is carrying on a business, carrying on a business, say profession as per 44AD, 44ADA, that is specified profession, and you want to claim less than the percentage, that is 50% of the gross receipts, then automatically you have to get your books of accounts audited. Here also, that in case of an individual HUF, your income need not go beyond basic exemption limit. That exception is also not there. But please keep in mind that 44ADA is only talking about the person who is carrying on a specified profession. If you are carrying on a non-specified profession, then automatically if your gross receipts carrying on gross receipts are going beyond 50 lakhs, then audit is mandatory. Now, what is the specified professions? Specified professions are mentioned like and as per 44AA, because 44ADA says that the specified profession are those professions which are mentioned under 44AA1. So these are the professions which are listed in 44AA: legal, medical, engineering, architectural, professional of accountancy, etc. Now we'll see the magic, because the act is given. These are the professions. Sir, if there is a question, shall I take it right now, sir? Secretary sir, I'm comfortable in taking question right now. Shall I take it right now?
Yes, sir. Yes, sir. Yes, sir. It's your call. You can.
Yeah, sir.
Yeah.
So there is a question, sir. It says that during the financial year 2020-21, my turnover is 1.75 crores, but my receipts and payment in cash exceeds 5% of the total turnover receipts and payments. So can I declare my income under 44 AD or my books of accounts? Sir, if you are eligible for 44 AD, if you are not carrying on any commission business or etc., and your turnover is not crossing 2 crores, and also you mentioned that your receipts and payment have crossed the 5%, so you are not eligible for the higher limit of 10 crores, then absolutely you have the option of 44 AD, sir. Absolutely, that is very much is available to you. And if you already started offering for the last 5 years, it is advisable for you to continue under 44 AD. Yes, you can do it, sir. Audit is not mandatory, because this receipt and payment of having less than 5% gives you a higher limit. Instead of 2 crores or instead of 1 crore, it gives you up to 10 crores. But please remind that once you cross 2 crores, you are automatically outside 44 AD. Sir, in the example you quoted, if it is 2.75 crores, sir, then automatically your books of, you are required to get books of accounts audited.
பேரின்மை தான் நம்ம தான் ஃபைல் பண்ணதுங்க சார். இது ஒன்றும் பிரச்சனை இல்லைங்க சார். வந்து அவங்க பொண்ணு கனடாவில் வந்து டென்டல் படிக்கிறாங்க. கனடாவில் டென்டல் படிக்கிறாங்க சார், டாக்டருக்கு. அவங்க வந்து ஒரு சர்டிஃபிகேட் ஒரு 1 crore above ஒரு மாதிரி.
Sir, somebody please.
Yeah. Chairman sir. Chairman sir.
எங்க மாற்றதோ அதெல்லாம் கேபிட்டல் இது வேணும், அக்கவுண்ட் காப்பி வேணும், அவங்க பேர்ல ப்ராஃபிட் இருந்தா ப்ராஃபிட் வேணும்.
பேர்ல ஒரு 40 ரூபா பக்கமா காமிச்சிருக்கீங்க சார். செட்ல 40 காமிச்சிருக்காங்க.
Yeah, sir. So
பேரின்மை தான் சார். அதுக்கப்புறம் உங்க வைஃப் பேர்ல ஒரு
சர்டிஃபிகேட் யார் பேருக்கு வேணும்?
அவங்க பொண்ணு பேருக்கு.
பொண்ணு பேருக்கு
அவங்க பொண்ணு படிக்கிறாங்க அப்படின்ட்டு அவங்க அப்பா பேருக்கு மாடலுக்காக
மாடல விடப்பா யார் பேருக்கு
மியூட்ல தான் இருக்காங்க சார். ஒரு சிலர் வந்து மியூட்டாலா? ஓகே, எஸ். போட்டு அவரை மட்டும் மியூட் பண்ணிட்டா சரி இல்லையா?
டாக்டர் பேரு.
Sir, shall I continue, sir?
Yes, sir. You can continue, sir.
Yeah,
There was a little problem because.
Yes, no issue, sir. So now we'll pay a bit attention on what is turnover, what is gross receipt. Because what is turnover, what is gross receipt is not been defined under the Income Tax Act. So we have to take external aids for deciding what is turnover, what is gross receipt. Say, for example, external guide means guidance note and tax audit issued by Institute of Chartered Accountants of India. And based on what are the aspects the guidance note says, I think I brought some of the important aspects which requires our attention, because we know what is turnover, what comes to turnover, and gross receipts we all know. But there are certain items which may be credited to P&L account, but it is not part of turnover. That is what I am trying to highlight in this slide. Any proceeds from the fixed assets or investment are not part of turnover. Don't get confused that if you are a person who is dealing in shares, then absolutely your income, they all becomes a stock in trade. But if you are not a person who is dealing with the investment in shares, not as a business, then it will be part of your investment income. So your investment income or your sale of fixed assets, though may be credited to P&L account, but it has no relevance as far as tax audit is concerned. And turnover affected on behalf of the principal. If you are an agent and if you have done any business or any turnover on behalf of your principal, then the risks and rewards are transferred from your principal to the third party. So it is not part of your turnover. So commission agent, for a commission agent, what is turnover is commission, not the value, not the amount which he has received on behalf of the principal. Where SSC is carrying on, this is a very interesting point, where SSC is carrying on more than one business, the turnover or gross receipts of the all business shall be considered except those businesses which are computed under presumptive scheme. So if I have three businesses, sir, A, B, C, all three businesses are in my name. I am only the one who is carrying on. And in respect of business C, I wanted to offer it under presumptive 44 AD. So in that case, for deciding whether I am required to get books of accounts audited, only the turnover of the business A and business B is only required to be considered, and turnover of the business C has to be excluded because we are offering under presumptive basis. So what I'm trying to say is the tax audit is for a SSE, not for a particular business. So please keep in mind. And this is also very important, sir. The value of any benefit or a perquisite, whether convertible into money or not, arising from a business or exercise of a profession, is included in the turnover. Say, for example, sir, I fought a case on behalf of my client and we won the case, say, for example. So as a gratitude, as a loyal, he gave me a costly watch, or he gave me a car as a gift. Now the question comes whether the value of the car is to be included in the part of a turnover or not, because I have not done any professional services to receive this car. But the car which I've received is because of my profession, because I've rendered some professional services to my client and he was very happy to receive my services, and in addition to my fee, he gave me a car. Is it taxable? Yes, because section 28 clearly says that the value of any benefit or a perquisite which is convertible into money or not, when which is coming out of exercise of my profession, then absolutely the value of the market value of that car has to be included in my gross receipt, and it is part of my turnover to decide whether I'm liable for tax audit or not. That is, you have to consider that value also you have to consider. And in case of a F&O, this is a very famous transaction. The futures and options which are carried on through stock market is not a speculative transaction as per 43 subsection 5. They are non-speculative in nature. So in F&O transaction, the futures and option transaction, both the favorable transactions and unfavorable transaction. Say, I'll take an example, sir. If you buy a future, buying at 100 rupees and selling at 90, so there is a loss of 10. And there is another future which you have sold, bought at 120 and you sold at 150. So how to decide the turnover? It means whatever be the negative value and positive value, forget about whether it is negative or positive. You need to add all the values. Say, for example, for one transaction, I have got a negative of 10,000. Another transaction, I got a positive of 20,000. So normally what we do, we'll add both. If we add both, turnover will result in 10,000. But the guidance note says, don't worry about what is the result, whether it could be a negative result or a positive result. You simply add back. So in the example I gave, one transaction I got a negative 10,000 and another transaction I got a positive 20,000. My turnover is 30,000, not 10,000 rupees positive. That is how you have to calculate both the favorable positions and as well as unfavorable positions. We have to ignore the unfavorability, we have to ignore the minus, and you have to keep on adding all the values. Then you arrive at what is called turnover. So turnover is sale price minus bought price. And if it is a positive or negative, it doesn't matter. We need to add all the values to arrive at the turnover. And if you have got any out of pocket expenses, this is generally happens if we visit for an audit and there is a traveling expenditure and stay expenses. And if we charge them, if they recover them separately, not part of a consolidated invoice, then absolutely they are not part of my turnover. If I give a one single invoice, including all the expenses which I incurred, then it is very much part of my turnover. And dividend on shares of an SSE dealing in shares are part of a turnover. This is a very, very important, sir, because section 56 of the income tax says that dividend from shares is always an income from other sources. Though, suppose if I'm a person who is dealing in shares, I'm buying and selling as my business, and there is some stock and which I have received dividend. Is it business income or is it income from other sources? Though it is an income from business only because I am a dealer in shares, but the income has to be offered under income from other sources because of section 56 clearly says so. But to decide whether what my turnover, the dividends, even though they are taxable under it income from other sources, they are very much part of my turnover. So to decide whether I have to get books of accounts audited or not, I have to consider dividend income for determining whether I am liable for audit or not, even though this dividend is taxable as income from other sources with regard to section 56 of the Income Tax Act. Amount received by way of advances for services to be rendered will not be part of a gross receipt. This is for a profession, sir. So if I received any advance from my client and he gave me an advance, and I have not started rendering any service, I have not rendered any services to him, that advance is not part of my turnover. But with regard to GST, it is a different aspect. But as far as income tax is concerned, this is not part of my turnover because I have not rendered any services. Now there are a few issues, sir. I want all of you to participate while answering this. There is one issue. A doctor is running a clinic and a medical store, and his professional receipts are 70 lakhs. So from his profession, he is running a 70 lakh rupee. And from medical store, he got a turnover of 82 lakhs. Is he required to get books of accounts audited? Sir, I want all of you to participate and answer it, sir. So professional receipts are 70 lakhs and medical store receipts are 82 lakhs. Is he required to get books of accounts audited for a clinic and as well as a store, medical store? I think someone gave an answer. I will see. They're saying yes. Sir, can you tell me why it is yes, sir? Because sir, can you tell me the reason, sir, why it is you are saying yes, he is required to get books of accounts audited? Tax audit is based on PAN, not on the business. Okay. Sir, I'll put it in a way, sir. Now, in this example, he is carrying on both the profession and as well as business. Now, as far as profession is concerned, his profession is a specified profession, sir. So that limit is 50 lakhs only. So he crossed the limit of 50 lakhs. He crossed the limit of 50 lakhs. But as far as medical store is concerned, which is carrying on under the head business, the turnover is less than 1 crore. So for my professional receipts, I am required to get books of accounts audited. But when I look at my business receipts, I am not required to get books of accounts audited. So the question is, if an SSE is carrying on both the business and as well as a profession, and his professional receipts are more than the limit for our tax audit, is he required to get books of accounts audited relating to business also? Is my question. Okay, I'm going to get my professional receipts only, get books of audited, but not business because my business receipts are less than 1 crore. Is it the correct way? Is it correct? Because my professional receipts are crossing 50 lakhs, it's a specified profession, then definitely I require tax audit. So whereas medical store, it is a business and it is less than 1 crore, am I required to get books of accounts audited for business also? Because my professional books are getting books audited under 44 AB. because here he is carrying on 2 activities. Here, the guidance note and tax audit says that since both the transactions, both the business and as well as profession, they're falling under business or profession only. So once, if you are carrying on business and as well as profession, and once your business or a professional receipts crossing the particular tax audit limit, you are required to get books of accounts audited of the both profession and as well as business audited under 44 AB. So in this case, all of you are correct, sir. Since my professional receipts are more than 50 lakhs, and I am required to get books of accounts audited for both the activities, for both the medical nursing home and as well as for the medical store. I am required to get books of accounts audited for both. Now take another example. SSC is carrying on 2 business and turnover from the both business is 40 lakhs and 70 lakhs. Is he required to get books of accounts audited? He's not carrying on a profession, is carrying on 2 business only. So now is he required for each business? His turnover is less than 1 crore, 40 lakhs and 70 lakhs. So is he required to get books of accounts audited? Just now we discussed that once SSC is having more than 1 business, we have to aggregate the turnover of all the business to determine whether he is subject to tax audit or not. Since he is having 2 business, I have to add both the business and come to a conclusion that whether I am required to get books of accounts audited or not. Now I change a bit the same example in a different way. SSC is offered income under 44 AD for year 1 and year 2. In the year 3, his turnover is crossed 2 crores and books were subject to tax audit. In the year 4, can he opt for presumptive taxation under 44 AD? So year 1 and year 2, he has opted for a tax audit. He has opted for 44 AD. In the year 3, he's crossed the turnover of 2 crores. So he was subject to tax audit. In year 4, can he opt for presumptive taxation under 44 AD? Yes, someone gave an answer. He's saying that yes. Okay. Can you give me the reason why you are saying yes? Ma'am, you can unmute yourself and you can share your views with us, sir. With this, ma'am, no problem. Gomati.
Yes, sir. Good evening.
Yeah, ma'am.
The chain of 44 AD has been broken only because the turnover is achieved as a recurring tax audit. So there will be no restriction on for opting 44 AD again if the turnover is below.
Yeah, perfect, ma'am. Because the 44 AD subsection 4 says that as long as 44 AD is applicable to you, you are required to offer your income under 44 AD continuously for 5 years. So in the next 5 years, if you cross in any 1 year, if you cross the turnover of 2 crores, then automatically you are outside the 44 AD. So you don't have an option to offer your income under 44 AD. So now in this example, in year 3, his turnover has crossed 2 crores. So he has not offered his income continuously for 5 years. Is not because of his turnover has crossed 2 crores. So he cannot be in 44 AD. He cannot offer his income under 44 AD. So it's a statutory limit. So he has not done it voluntarily. So in that case, in the year 4, he can absolutely offer his income under 4480 because 4480(4) is not applicable. Because 4480 subsection 4 is applicable only and only as long as your turnover is within the limits as mentioned in the 4480 and you are continuously not offering your income under 4480 for 5 years, then there is a break of chain. Then absolutely you are required to get books of accounts audited. But once you cross the turnover of what mentioned under 4480, you are anyway out of 4480. Thereby, in the next year, if your turnover is less than 44 limits mentioned under 4480, absolutely you can still offer your income under 4480 and audit is not required. And since in the year 3, the turnover has crossed 2 crores, so obviously the SSC is outside the scope of 4480. So absolutely there is no break or there is no break of link. So he can offer his income under 4480 in the year 4. Now we'll look at the reporting part. We all know that now recently for few years the reporting has to be done electronically only. Now recently in January 6th they have changed the the schema for the tax audit also. So reporting has to be done electronically. So I have not discussed much about the reporting electronic filing system because we all know everybody know that how the client has to add our results as a CA and then we have to accept. He has to give the balance sheet and profit and loss account to us, and then we prepare 3CD, we add JSON file and we file JSON 3CD along with balance sheet and profit and loss account, and again it will go back to the client. Client will accept all the procedure, we are aware of it. So I'm not going to discuss much about it, but if you have any query, definitely we'll be discussing on that. So it is very much important on the part of the SSC to first add ourselves as a CA to allow us to file the form 3 to fill the form 3CA and so 3CA or 3CB and 3CD electronically. In case where the books of accounts are required to be audited under any other law, say for example, we are talking about any society law, any societies or cooperative societies act, if books of accounts are also audited under that law, it is sufficient to get books of accounts audited under that act and obtain a certificate under 3CD and as well as audit report under 3CB or 3CA. In reporting has to be done, audit reporting has to be done either in 3CA or 3CB, depends upon whether they are required to get books of accounts audited under any other law or not. If they are required to get their books of accounts audited under any other law, then 3CA you have to give an audit report. If the books of accounts are not required to be audited under any other law, we have to give our audit report under 3CB. So the quality and the standard on quality control, they have given certain criteria that how to express opinion, how to express an opinion if you have any disqualifications or those matters has to be looked into. The quality standards or on the audit and the tax audit also you have to look into while drafting form 3C and 3CB. Audit report, can an audit report be revised? Earlier we don't have a clarity whether audit report can be revised or not. Based on the judiciary, we said that if there is a revision of books of accounts after the books of accounts have been adopted, or if there is any extraordinary scenarios where you require your revision of books of accounts, then only you can revise your tax audit report. But now, since you are filing tax audit report 1 month before filing the income tax return, there could be a scenario where there are certain sections, say 43B or relating to section 40 TDS disallowances, where you can make the payment of TDS or the expenditure. Say, I'll give you an example. I have to pay an interest to the bank. So I have not paid within the financial year and I have not paid that amount before filing the tax audit report. But I have paid this interest amount to the bank after the tax audit report has been filed, but before the due date for filing return of income. Because in the next slide, we will see what are the due dates. There is now from the last year onwards, there is a gap of 1 month. So first we have to file the tax audit report, then we will file income tax return. So now the law has given the references only to the income tax return date, not to the tax audit report date. So as per 43B, to claim the interest on any loan which I've taken from my banks or financial institutions, that interest actually has to be paid before the due date for filing return of income. But at the time of issuing my tax audit report, the due date for filing return of income has not been expired. But while I'm framing my tax audit report, I see that this interest has not been paid. So definitely it requires a disallowance. So I'll disallow and I'll compute the tax liability. But this interest has been paid before the tax return has been filed, but after my tax audit has been filed. So in that case, I am allowed to revise my tax audit report based on the change in disallowances, because the payment has been done within the due date. So I have to re-look into my disallowances, which I mentioned earlier, and that requires my revision of a tax audit report. That is very much required. But please keep in mind that the revision can be done only for these two, for recalculating my disallowances, which are there in section 40 and 43B only. So if I paid anything, if I complied with these sections after I issued my tax audit report, definitely my tax audit report requires revision. Other cases, it is not allowed to be revised. Now, these are the due dates for audit. 44AB requires that SSC to get his accounts of the previous year audited before the specified date and furnished by the date of the report of the auditor. So I'll share my experience. What has happened is, in 1 year, the student of the CA, and then the article students is not aware of this provision, and he mentioned in the tax audit report, the date of report is on 30th September. Earlier it used to be 30th September. So in the tax audit report, the date that was mentioned is 30th September, and it was filed. And a scrutiny notice has been issued stating that you have not get your books, you have not filed your tax audit report within the due date. So why can't I levy a penalty and like that? Because the section is very, very clear that you have to get your books of accounts audited before the specified date. So how this can be ensured? That the tax audit report, the date on the tax audit report, it should be before the 30th September in the example I gave, and I can file the tax audit report by 30th September. That is very much permitted. So that aspect we have to take care. So what is the specified date? Now the specified date has been changed. It is specified date means 1 month prior to the due date for furnishing return of income under 139(1). Earlier, we used to file both the tax audit report and as well as income tax return simultaneously. Now there is a time gap of 1 month has been prescribed. So first you file the tax audit report, then you file the income tax return. So in that way, the gap of 1 month is maintained. So you have to finish your job, and you have to issue an audit report at least before the specified date, before the cutoff date, and file it by cutoff date, and file the return of income 1 month later. That is also permitted. So due dates, these are the due dates which are very latest. Earlier the due dates were 15th of January. Now it has been extended to 15th of February. These are only for filing audit report. In the 15th of March, I will be filing income tax return for these SSCs who are required to get books of accounts audited. So all the SSCs, the time limit has been extended for filing the tax audit report. That is 15th of February. Earlier it used to be 15th of January. Now it has been extended to 15th of February. And this slide, as I mentioned it, because it is very, very important. There is one clue which we need to take forward while understanding the tax audit. Maintenance of books of accounts. Section 44 AA says that there are SSEs who are required to maintain books of accounts. Now, what the section 44 AA subsection 1 says? It says every person engaged in the carrying on a specified profession shall keep and maintain such books of accounts which enable the AO to compute the income. Right? So there are rules. Rule 6F says that what are the books of accounts which are to be maintained by the person carrying on a specified profession. So the books of accounts are clearly mentioned for specified books of account profession, person who is carrying on specified profession. Every person who is carrying on a non-specified profession or business are required to maintain books of accounts only if this criteria has been met. What is that criteria? Income from business or profession. Profession means non-specified profession exceeds 1,20,000 in any of the 3 years immediately preceding the relevant previous year. But if the SSE is an individual or HUF, then his income from business or profession should exceed rupees 2.5 lakhs. For other than individual or HUF, say for example, for a partnership firm, if their income from PGBP is more than 1.2 lakhs in any one of the 3 years immediately preceding the current previous year, then you have to maintain books of accounts. But if you are an individual or HUF, then your income from business or profession has to be exceed 2.5 lakhs in any one of the 3 years preceding the current previous year. Suppose you have started your profession only during the current year only, or you have started your business only during the current year only. So there is no history of last 3 years. So don't worry that 1.2 lakhs or 2.5 lakhs, you have to look at only for the current year only. This is the income part. Or if your turnover or gross receipts from the business or profession exceeds 10 lakhs, in any one of the 3 years, you are also required to maintain books of accounts. So there are two criteria. One criteria is income criteria. Another criteria is turnover criteria. And if you are an individual or HUF, then if your turnover or gross receipts crosses 25 lakhs in any one of the 3 years immediately preceding the relevant previous year, maintenance of books of accounts are mandatory. And where if SSE is claiming the income to be lower than the deemed income, 44 AE and 44 BB and 44 BB and 44 ADA. 44 BB and triple B are relating to non-residents. 44 AE is relating to transportation business, and 44 ADA is relating to specified profession. But here we have to understand one aspect. If you are carrying on a business of 44 AE and a profession under 44 ADA, even though your income is not exceeding basic exemption limit, you have to maintain books of accounts once you are offering your income less than the limit which are mentioned under 44 AE or 44 ADA. That is very, very important. But if you look at 44 AD, that is, if you are not offering your income continuously for 5 years, then maintaining books of accounts are audited irrespective of the turnover. But here also, your income from business or profession should cross your basic exemption limit. Otherwise, you are not required to get your books of accounts audited. Suppose my turnover is I have not offered my income continuously 5 years under 44 AD, but my income is 1.2 lakhs only. So if my income is only 1.2 lakhs, which is less than basic exemption limit, I am not required to get my books of accounts. I don't have to maintain books of accounts. If I don't maintain books of accounts, then there is no question of getting books of accounts audited. Sorry, till this, if you have any question, you can ask me before we move on to the 3CD, where the discussion will be a bit in depth. If you have any question up to this, you can ask me, or I'll move forward. All right. Now, 3CD is a statement. 3CD is a statement, not exactly reporting, not exactly like an audit report. In 3CD, we have to mention the facts which we have examined from the books of accounts. This is a very, very, very important point, because if you look at the provisions of 3CD, it says that these are the points. 44 clauses are there in the 3CD. Of course, 44th clause is kept in abeyance, and the 36th clause is also removed. So you keep these two in mind. So 44 clauses, the auditor has to give the information. Now tell me, is tax audit is for the SSC or is for the department? Are we getting books of accounts audited, and is it for the client? Is it for the SSC? Is it for the department? Any idea, sir? Of course, you are aware of it, but can anybody answer this? Is tax audit is for the SSC or is for the department? I hope I raised a relevant question, sir. So is it for SSC? Is it for the department? Actually, we are rendering services to the departments, or not to the client. But unfortunately, we are collecting fee from the client, but we are giving information to AO, not to the client. So the information which we put under 3CD, we are doing a service to the assessing officer or the department, not to the SSC, but we are collecting fee from the SSC. That's a different point altogether. Now, one important aspect is, while I'm answering my question or clauses in 3CD, am I required to look at only books of accounts, or am I required to look into other documents also? Say, for example, there is a sale. Say, for example, that there is a sale of an inventory. So I look at the inventory. So do I do it to see the valuation report, or do I need to look at some other external documents which is not there in not part of books of accounts? Am I required to do that? Is my examination is only limited to books of accounts, or am I required to look into the other documents also? See, generally, to my understanding, what people will do, there are two clauses in clause B. There are 2 points in clause 11 of part 3CD. One is, what are the books of accounts maintained by the SSC? A, B, C, D, journal, stock, etc., purchase book, sale. And the second, you have to mention out of this what you have exactly examined. So books of accounts you have mentioned, and also you have to mention not only books of accounts, if you have examined any document which is not part of books of accounts, you have to mention that also. So what generally we do is, we write book, journal, cash books, etc., and same we will also put the same accounts in the what we have examined. But it is always advisable to put exactly what are the documents you have examined. It is not only simply the books of accounts. If you have seen any other documentation which is may not be part of books of accounts, but which is relevant for answering your question under 3CD, you mention that also. That is also very, very important. And location where the books of accounts are kept is to be mentioned. This is where generally we mention the address of the SSC, and I come across one scenario where we also mentioned that books of accounts are maintained at the registered office or at the corporate office only. But when they came for this survey, the books of accounts were not available there. The books of accounts were not available. The officer has asked, you mentioned in the tax audit report that your books of accounts are here, but the books of accounts are not here. The books of accounts are not here. Then where the books of accounts are there? So you have not filled your tax audit report correctly. So since I could not find your books of accounts at where you are mentioning, so why can't I say that you are not maintaining any books of accounts? So this is the criteria. So if you have to mention the address where the books of, so if you are maintaining the electronically like Tally, or you have to clearly mention where the backup file is available. So address is very, very important, because these things will come into handy while they come for survey. And one more aspect, you please share any of your experience. Is it mandatory that once you get books of accounts are audited, your books of accounts are not subject to scrutiny? Anybody is having that kind of an opinion that once books of accounts are audited under 44 AB, those books of accounts are not subject to scrutiny? So don't have an view that once your books of accounts are audited under 44 AB, we are clean from scrutiny. No, we are absolutely, where our books of accounts are very much subject to scrutiny. And even though you have written that the SSC has complied everything in the 3CD, but while the scrutiny, the SSC has not shared that information with the assessing officer, you can completely go against your tax audit report and can make an assessment. That is also very much possible. Clause number 12, this is also very, very important. So is it possible for an SSC to show the profits of the two business? One business is subject to tax audit and second business is subject to presumptive taxation. Can I show both the items in one return? Is it possible? Is it possible that an SSC get books of accounts of one business audited and books of accounts from another business under presumptive taxation and show his income under one return? Is it possible? Yes, sir, it is very much possible. And in Form 3CD, if SSC who is subject to tax audit is also offering his income under presumptive basis, there is a clause number 12 in the 3CD which requires you, the assessing officer, to mention what are the amounts which are amounts of the profit which are indicated in the presumptive basis. Now, question comes: is it mandatory on the part of the assessing on the part of the auditor to calculate what is the income that has been, is he required to compute the presumptive income, or he just have to mention what has been offered? So what I'm asking is, if the SSC say offering at 8% or 9% or 10%, is auditor is required to give his opinion whether he's offering at 10% is correct, whether he's offering at 8% is correct. Is he required to give any opinion on that on calculation of presumptive taxation, or he just have to mention the amount only? Because we have faced this in one scrutiny, that why you have not why these profits which are mentioned in the tax audit report is not as per 44 AD, but you have mentioned that these are as per 44 AD. Why so? So are we required to calculate the incomes as per presumptive taxation and mention it, or we just have to put what exactly is shown in the ITR? So the point is, we have to show what exactly the amount, the profit which has to be What is the amount of profits and gain assessable? This is what profit and gain assessable on a presumptive basis only we have to mention. Clause number 13 says that we have to comply with the ICDS. Once you have an income from PGBP and other sources, compliance with ICDS is mandatory. For ICDS, there is no turnover criteria. Only once you cross this turnover, only you have to comply with ICDS or not. Those kind of criteria is not there as far as ICDS are concerned. So compliance with ICDS is mandatory irrespective of your turnover. And only those SSCs who are who are maintaining the books of account on a mercantile basis is only required to comply with ICDS. And once your ICDS are applicable, in the sense that once you have an income from business or profession and other sources, then you have to comply with the ICDS is mandatory. And as a tax auditor, I have to see that the income which has been income which has to be computed as per ICDS have to mention there. So I have to clearly come out with my exam after examining that whether the SSC has computed his income under head PGBP in line with ICDS or not. If he has not computed his income as per ICDS, it is my responsibility as a tax auditor to recompute the profits and give that information, whether that any adjustment is required, whether I need to increase the profit, whether I need to make any adjustment to the revenue or expenditure according to, say I'll take you an example. If there is your client is a contractor, and ICDS on construction contracts is applicable to them. So as per ICDS, retention money is part of contract revenue, but in the books of accounts and as per as accounting standard also, we will never take retention money as a part of a contract revenue. So as a tax auditor, I have to look into the books of accounts of the SSC and see that whether he has arrived the contract revenue as per ICDS or not. Please keep in mind that I need not do any change in the books of accounts. That is not the criteria, because when I started the discussion on 3CD, I told you one aspect that your all information which you have to give in the 3CD is only as per books of accounts. But in the books of accounts, the amount which has been arrived and the income as per ICDS are different, because of retention money is part of a contract turnover, contract income as far as ICDS is concerned, but as far as accounting standard is concerned, retention money is not part of your contract revenue. So as a tax auditor, what I need to do, I have to recompute the profits of the profits from the construction contract as per ICDS and put that figure in the clause 3CD and said this is the profit as per books, this is the profit as per ICDS. If there is any increase or decrease to be made to the profit, this is the impact, which I have to clearly mentioned in clause number 13. This is a very, very important point, but majority of us, unfortunately, will say that we don't require any adjustment to a profit without really looking into whether any adjustment is required or not. And compliance with ICDS is only for computation of your income. You need not make any changes in your books of accounts, which we already do. And any adjustment to the profit and loss is required, the details along with the impact. So I have to give what is the contract revenue which I have arrived, what is the contract revenue as per the books of accounts. As a result, whether my income goes up or goes down. So that calculation I have to clearly give in the clause number 13. There's a very, very important criteria which we need to look into. And clause number 20, which talks about amount of the contribution received from the employees from various funds, the auditor is required to report the details of the amount paid and date on which they were paid. Here there is a controversy that as an employer, if I'm collecting provident fund contribution from the employee, so first it will be added to the income of the employer, And once he contribute to the account of the employee under a relevant provident fund, then automatically I can claim deduction. Now there is one dispute with regard to the due date here. The due date under 43B is up to the date of filing return. But the section 36 which we are discussing, whatever be the contributions which are collected from employee and paid to the government. Here the due date is due date as per the relevant act, not up to the date of filing return of income. But there are judgments, there are judicial pronouncements which says that even for the contributions which are collected from the employee can be deposited before the filing, before the due date for filing return of income. So even though the due date for payment as per the relevant act is say April 15, I can still make the payment till the date I filed my return of income, and I can claim that expenditure. So I am relating the deduction under 36, which talks about the donation contribution which I am recovering from employee. It is not the contribution made by the employer. It is a contribution recovering from the employee has to be paid to the relevant fund as per the due date mentioned in the relevant act, not as per the due date for the filing return of income, which is mentioned under 43B. But there are court judgments which says that the employer can make this payment before the due date for filing return of income, even it is collected from the employee. Now Finance Act 2021 has made all the things set aside. It says that whenever you are collecting any amount from the employee, please exclude 43B. So don't apply 43B. So don't say that I can make this payment up to the due date for filing return of income and claim expenditure. That is not at all possible. So they have cleared all the ambiguity. So they have nullified all the judgments. Now it's very clear that when you are recovering any amount from the employee towards your provident fund or ESI, that amount has to be made on or before the due date specified under the ESI Act or under the Provident Fund Act, and not till the date of due date for filing your return of income. That extension is gone. You cannot do that. That is why they have, yeah. So that is why they've added one explanation 5 to 43B, which says that the disallowing the deductions for payment made beyond the due date under the relevant act, but before the due date filing the return. So that is gone. Now, any contribution which you have collected from the employee, it has to be paid on or before the due date under the relevant act. And it cannot be extended up to due date for filing return of income under 43B. That is not at all available. But that benefit of payment up to the due date for filing of return of income is available for employer contribution, not any amount recovered from employee. That is not possible. Now 48.3 and 3A. So 48.3 says that any payment in respect of any expenditure or allowance made otherwise than account paid check or account paid draft or electronic transfer, then expenditure will be disallowed. 48.3A says that in one previous year, you have claimed an expenditure on accrual basis. Say, I paid to transporter, I booked an expenditure for transportation 40,000 in year 1. I claimed it because it is on accrual basis. In year 2, I made all this 40,000 rupees in cash. I have an impression that since it is already allowed under in the last year, if I make a payment in the current year in cash, it will not have any impact. But 48.3A says very clearly, once you booked your expenditure on accrual basis, even payment for that expenditure is also should be made only through account paid check, account paid draft or electronic transfer if the payment crosses more than 10,000 rupees. Now, the clause 3 in the clause 21 of the form 3CD clearly says that where the payment is referred under 48(3)(a). That means if you are a tax auditor for the current year, you have to look into the previous year records also. This is what I'm referring to. Other than books of accounts, I have to go back to the last year records, because last year I have to see that whether it has been claimed on accrual basis or not. And if it is answer is yes, then I have to disallow in the current year, because he's making the payment in the current year more than 10,000 rupees in cash. So here I have to look into the last year records to see that what was the amount of the expenditure which they claimed on accrual basis, and what is the payment made in against that expenditure during the current year. And if the payment crosses more than 10,000, then obviously I have to disallow the entire expenditure under 48(3)(a). So those details has to be considered. But if that payment is covered by any exception which is there in the Rule 6DD, because Rule 6DD has given lot of situations where the amount can be paid in more than 10,000 rupees in cash. That is very much possible. So this is a very interesting point, because if there is any prior period items, there is a clause in Form 3CD. It says that if there is any prior period item, that prior period item, it can be expenditure or receipt. The auditor has to give details of the prior period items also. But mind you, the items which are covered under 48(3)(a), they are not prior period items. So don't put these details under prior period items. Now, clause 31, this is also very, very important clause. There is an common understanding that this is only relating to the loans which are covered under 269SS. That is any loan more than 20,000 received in other than account pay check or account pay draft. But if you see the clause very clearly, it says that it requires the auditor to report on each loan or deposit. So he's not talking about the loan exceeding 20,000. He talks about each loan where the loan amount is more than 20,000, exceeding the limit which is prescribed mentioned in 269SS. So if I've taken a loan more than 20,000 rupees, even if I taken through banking channels also, no problem, I have to give these details. Because very clear, each loan or deposit in an amount exceeding the limit specified under 269SS. So the reference to 269SS is only for the amount of the loan or deposit. That's it. So they are not talking about receipt of loan or amount deposit in cash. So we have to give all these details: name, address, permanent account number, amount of the loan taken or accepted, whether any loan given and loan receipt and payment has been squared off. Those details are also has to be given. And the loan taken accepted by use of how we have taken that. Have we taken that through account pay check, account pay draft, or through electronic clearing system? Everything we have to give. So this is a very, very important point which we need our attention. So don't be under the impression that only when there is a 269SS violation we have to give. No, it's not the point. And also there is one more clause under this clause only. There is a point BA. It says that particulars of each receipt. Here we are talking about each receipt. So earlier we talked about each each receipt exceeding limit which is mentioned under 269ST. What is the limit under 269ST? What is the limit mentioned in 269ST? Anyone? what is the amount which is mentioned in 269 ST? It is 2 lakh rupees. So if you have made any receipt more than 2 lakh rupees, then in respect of a single transaction or event, etc., then you have to give the details, and even whether the receipt is other than account pay check or draft also, you have to give these details also. So this is another important aspect. And particulars of any receipt which is not been done through account pay check, you have to give only the name and the PAN number and amount of the receipt. That's it. So here he is talking about the limit specified under 269 ST in aggregate from a person in a day or in respect of a single transaction or transaction. There it is very much 269 ST. This is entire 269 ST has been mentioned here. And this is very important point. So far, we are aware of the fact that if I receive more than 2 lakh rupees in a mode other than account pay check or draft, I have to give the details. But here in this clause, if I make any payment to another person 2 lakh rupees or more, I have to give that details also. Not only receipt details, but also payment details I have to give in clause. In this clause, it says that particulars of each payment in exceeding the limit which is mentioned in 269 ST, which is 2 lakh rupees, in aggregate to a person in a day or in respect of a single transaction, etc., otherwise done by a check or a bank draft are using. So in this scenario, the SSC was asked to give the details of the payment details also, not only just receipt details, but payment details also I have to give. So if I made a payment to any person, say for example, if there is an event in my company and I've paid a event manager 3 lakh rupees, but in which 2.5 lakh rupees is in cash and 50,000 rupees is in check. So in that case, I have to give the details of that payment in this clause. As an auditor, definitely I have to give those details. What are the payments which were made in a limit exceeding to any payment more than 2 lakh rupees, how the payment has been done. And here also the payment has been done through a bank check, but it is not through account pay check. Those details are also has to be given. Sir, am I going a little bit ahead, or you people am I confusing you more? Anything like that, you please let me know.
No, sir, going smoothly, sir.
Yeah, fine, sir. So any payment in respect of limits which are mentioned under 269 ST, which is 2 lakh rupees, I have to tell the department that what are the payments which are been made through account pay check, and not through account pay check, but some check like bearer check or something. Those details are also have to give. This is a very important and very interesting clause. So far we know that if we receive, we have to tell how much we have received. But under 216 ST, we also tell the department that how much has been paid also. From that aspect also, we have to report in Form 3CD. And clause 34, sir, this is also very important thing. Here we say that SSC is required to furnish a statement of tax deducted or collected at source. If yes, please furnish these details. Now what they are saying is, if you are filing your 24Q, 26Q, 27Q or 27EQ, 26QB, etc., which is required to be filed by the SSC, if there is any TDS has been done by him. Now, if any TDS has been done by the SSC, then it is mandatory for the auditor to mention that they are filing quarterly returns or not. Question number 1. Are they filing within time limit? Fine. These two are fine. Now there is one more thing which is lying in this column is a bit different. Whether the statement of tax deducted at source and collect source contains the information about all the details or the transactions which are required to be reported. Here is a challenge. So majority of us, so this I saw so many cases where under 194C, if you are making a payment to a transporter, okay, if you are making a payment to a transporter, there is a leeway which says that if the transporter doesn't own more than 10 vehicles, and if he gives a declaration to the payer saying that, sir, I don't have more than 10 vehicles and I am furnishing the details you are asking for, like PAN, everything, then please don't deduct TDS. So fine. So I am receiving services of a transporter. So transporter gave his PAN. So I'm very much satisfied. I gave him information and he has submitted all the information. Now, is this transaction has to be reported in Form 26Q or not? So we don't examine, we only examine the fact that, okay, quarterly returns has been filed. Okay, filed. So is there any delay? We don't see the delay. Because so far we only look at TDS calculations. Whether TDS has been deducted, yes, deducted. Whether TDS has been deposited within the time limit, yes, deposited. Is there a delay? Yes. If yes, we have to see the interest calculation. If there is no delay, no problem. If there is no deduction of TDS, then we have to report. But for the first time, we are also asked to look into the tax quarterly returns also. Not only just say that, okay, quarterly returns has been filed within the due date or beyond the due date. Now we have to tell the department whether what are the contents has to be there in quarterly report, are there or not also. So we have to do the scrutiny of the quarterly reports also. We have to see the data, whether all the transactions which are subject to, suppose say if the deductor has got any certificate from the AO for lower deduction of TDS. So we have mentioned it. So we have to see that whether those details are given in the quarterly report or not. So all we have to be very sure that quarterly return has been filed and it also contains all the details which are required to be there. So and particularly I come across many of the scenarios where non-residents are selling properties in India. They bought a property elsewhere in India long ago, and they are selling the property right now. And what people will do, few people will deduct TDS under 194 IA, which is incorrect. Some people deduct under 195 for a capital gain or whatever, or capital gain transactions. But once they deduct TDS, they don't file 27Q. They only, non-resident is also happy, tax has been deducted and funds has been transferred, fine. And deductor is also happy, he has deducted TDS and he has paid the chalana. That's it, over. But the point is, the deductor has to file 27Q to get the credit to the deductee. So if I am an auditor of the buyer of the property, where he has deducted the TDS, he is paid to the government, but he has not filed a quarterly return, then definitely I have to report this in the Form 3CD. This is a very, very important and very significant change, because many of the cases where the TDS has been deducted from the non-resident transactions, people are only interested in deduction and payment of TDS, and they are not at all interested in filing the quarterly returns, which is Form 27Q. And even in some cases, non-residents are also not asking for the, this quarterly reporting, etc., unless they get a notice from the department. So this is a new change which I think that it requires our attention, because so far we are only worried about filing of a quarterly return, but now we are also report whether the contents which are to be there are also not there. All the details, again, you have to do the scrutiny of the quarterly return also. So till that, if you have any questions, you can ask me, sir. Anybody is having any question? Because for the last 1.5 hour, 1.5 hour, I'm the only one discussing. So if you have any query, you can please ask me.
Spectrum index. And on to the speakers.
Sir, Hari sir, you are saying something. I could not understand, sir.
Sir, I think we can proceed, sir.
Yeah, fine, sir. So if so that is a very significant change. And as far as TDS is concerned, TDS, we will discuss about the TDS provisions in a bit later. What are the changes we have to look into when we are dealing with the file, the filling of the details with regard to the TDS. We'll just look into a bit deeper once we go to the relevant slide. And what are the penal provisions if we don't get our books of accounts audited? That is also the first thing that we have to understand is, okay, we have not got our books of accounts audited, then what? The first thing that will happen is there will be a penalty. So how much is the penalty? The penalty is 0.5% of the turnover, or rupees 1,50,000, whichever is least. So in one way, we can say that 1,50,000 rupees penalty is the maximum penalty for not getting your books of accounts audited. That is a very, very important point. And but the section 271B, which levies for the penalty for not getting your books of accounts audited, comes with a exception which is provided under 273B. So 273B is a section which says that so no penalty will be levied if there is a reasonable cause for non-compliance by the SSC. Say for example, you appointed a tax auditor, but the tax auditor has not started his work and he has not completed his work within the time limit. Then what you can do? It is a very much reasonable clause. Or otherwise, if you have appointed an auditor, tax auditor, but in the middle of the assignment, he said that no, I cannot continue and I cannot finish. So thereby there is a delay in completing the tax auditor. So all these aspects is very much part of a reasonable cause. If you can show that you are limited or you are being affected by any circumstances which are beyond your control, then you can take a plea under 273B, which provides that no penalty under 271B can be levied if there is a reasonable cause. So reasonable cause you have to apply from the legal point of view, not from our understanding. So it really there is a genuine effort on the part of SSC to complete it, but he could not complete because of the circumstances which are beyond his control. Then definitely he will get a relief for levying a penalty under section 271B. That is there. But he has to prove that there is a reasonable cause for non-compliance of the provisions within the time limit. Now, so please pay attention here because it is somewhat very, very important from the tax audit point of view. So we all know that if you are an individual or HUF and you are coming to the tax audit for the first time, That means you are a person, say for example, an individual or HUF, his books of accounts are subject to audit for the first time. Earlier he was not subject to tax audit. So for the first time he was subject to tax audit. So in that case, for the year one, there are exceptions. He need not deduct TDS under 194A, H, I, J, and C. These are the exceptions which are provided there. So in that exception, they say that if he is not subject to, in case of a deductor is a individual or HUF, and he is not subject to tax audit in the earlier previous year, he is not required to deduct TDS under these provisions for the current year. This was the provision. So Finance Act has made an amendment. Finance Act 2020 has made an amendment. They have said that, boss, if you are doing any transaction which are subject to TDS under 194A, 194C, 194H, 194I, and 194G. Say for example, I have taken a services of a contractor. I am an individual, so I am taking a services from a contractor where the payment or where the expenditure for this transaction is say 1,50,000. So 194C is very much attracted to me. So when I am making a payment to my contractor, I have to deduct TDS, right? But last year I was not subject to tax audit. This is the first year I was subject to tax audit. So I taken a leeway that yes, because this section is saying that if I am not a subject to tax audit in the preceding financial year, then I am not required to deduct TDS under the current year under 194C. So taking that point, I have not deducted any TDS. So as a tax auditor, you cannot do or any disallowance of this section because the section itself is giving me the benefit. The wording was in the preceding financial year, SSE was not subject to tax audit. That's it. Now that has been changed by Finance Act 2020. So now we'll see what is the change. It says that an individual or HUF whose total sales or gross receipts from the business or profession exceeds 1 crore or 50 lakh rupees. 1 crore is related to business and 50 lakh rupees is relating to the profession. Exceeds immediately in the preceding financial year shall be liable to deduct tax under those sections. It's a very, very significant change. I'll take a simple example. Last year, I'm an individual. Say for example, I'm an individual. I do business. Last year, my turnover was 1 crore 25 lakhs. So I offered my income as per 44 AD. As per 44 AD. So once I offer my income under 44 AD, the AO cannot look into my TDS compliance. So TDS compliances are gone. Everything has been complied because expenditure has been deemed to be allowed and I have deemed to be complied with all the TDS related aspects. So last year my turnover was 1 crore 25 lakhs and I have offered my income as per 44 AD. Okay, I offered my income as per 44 AD. So during the current year, I am making a payment to the contractor where 194C is applicable. But current year also, say for example, I am offering my income under presumptive taxation or I am offering under tax audit. I am subject to tax audit. We'll see both the scenarios. So last year, I have a turnover of 1.25 crores. I have offered under 44 AD. Current year, I am also offering, say for example, I am having 1.5 crores. And also current year, I am also offering turnover. I am also offering my books of accounts as per 44 AD. If I don't deduct TDS, am I subject to disallowance or not? I ask my question one more time. Last year, my turnover, say last year in the sense that 2020-21, my turnover was, say for example, 1920, my turnover was, say, 1.25 crores. 2021, my turnover was 1.75 crores. Last year, I have offered under presumptive taxation. Current year, my case is covered under tax audit. And I have not deducted any TDS with an understanding that last year I am not subject to tax audit. So I don't have to deduct any TDS under 194C during the current year. So what are the consequences? As per this amendment, it's very clear that forget about whether you are last year you are subject to tax audit or not. But once your turnover in the last previous year has crossed the business 1 crore in case of a business per SSE and 50 lakh rupees in case of a person carrying on a profession, it is mandatory for them to deduct TDS under 194C, H, I, J and A. Whether you are subject to tax audit last year or not, it is not at all relevant. Only the turnover is relevant. So this is a very, very significant and very, very important change we have to look into. So the persons who are coming to the tax audit for the first time, the tax auditor has to look into what was the turnover last year. He cannot simply say, okay, last year he was not tax audit, so why should I look into his turnover? No. Once his turnover crosses, then you have to look into the TDS compliances for these provisions. And if there is a non-compliance, then definitely I have to report that non-compliance to the department. That is a very, very significant change. And one more criteria which we have to look very carefully under 194C, if I am making a payment for a work, making a payment to the contractor for work, and that work is for my personal purpose only. That, say for example, I am getting my house decorated from an interior decorator, and I'm getting beautified my house, and I'm making a payment to the contractor, even though I'm subject to tax audit because it is done for my personal purpose, there is no TDS requirement under 194C. So 194C clearly says that if I'm getting the services of a contractor for my personal purpose, then absolutely there is no need to deduct TDS under 194C. How much be the amount? Now that portion is also nullified. There is a provision which has been introduced by Finance Act 2019, is 194 capital M. It says that where an individual or HUF other than those covered under 194CHJ is required to deduct tax. The only way I understand, I look at this provision is 194M says that if you are a person who are getting any services from a commission agent, which is 194H, or from a professional, which is 194J, or from a contractor under 194C, even if it is for your personal purpose and the payment is exceeding 50 lakhs, 50, then you are required to deduct TDS. Then in that case, if there is a non-compliance from the SSE point of view, you have to look into this provision very carefully. Yeah. So these are all very, very important provisions to be looked at, because this is the first time we are coming across this. Because what happens is, so far, whatever the transactions which we have done last year, so we don't look into the amendments in a much detailed way. So we just only look at few provisions and say, okay, there is an exception, so you need not deduct TDS. But in the scrutiny, if we come across this section, it's very clearly says that the tax audit criteria has been removed. It is only the turnover criteria which has been put there. That is a very, very significant and very important change which we have to see. So there is one example which I want all of you to pay attention. Mr. A is carrying on this business as a turnover of 87 lakhs during the previous year 2020-21, and during the 2019-20 he has a turnover of 1.220 crores. He has offered his income in the current previous year under 44 AD for 2020-21 under 44 AD. He has paid to the contractor 5 lakh rupees without deduction of TDS. Whether is it subject to disallowance under 40 small a? (194M) is 2019 amendment, sir. So it is applicable from that. From, if I remember correctly, it is 1/9/2019. So yes, if it is, if you have taken services, suppose I have taken services of an interior decorator or architect for decorating my house, and if I am making a payment more than 50 lakh, then definitely I have to deduct TDS under 194M. Now look at this example. Last year, current year turnover is 87 lakhs, so he's ready to offer his income as per 4480. But last year his turnover was 1.2 crores, and he is paid as contracted to 5 lakh rupees without deduction of tax. Is it subject to disallowance under the current year? Nagarajan sir saying yes. Okay. Any other answer? Allowed. Gomati ma'am, you said allowed. Can you explain me why it is allowed, ma'am?
Yes, sir. Under 194C, if previous year is not subject to audit, we need not to deduct TDS in the current.
No, that is what we have so far discussed, ma'am. Last year, if my turnover is crossing 1 crore, then I am required to deduct TDS under the current year. Where is the tax audit criteria?
But 87 lakhs only, no, last year.
That is current year, ma'am. Current year, I am offering under 4480. Last year, my turnover was 1.2 crores.
Yeah, I misunderstand that, that's sir. Okay. I thought the previous year turnover is 1.2 and the previous financial year.
No. Current year only 87, ma'am. Last year is 1.2.
Okay, sir. Okay, sir. In that scenario, it may be disallowed.
Ma'am, it is allowed. I'll tell you why it is allowed. Once you are offering your income under 4480, AO cannot look into your non-compliance of TDS.
Yeah, sir, sure.
Okay. Once your income is offered under 4480, there is no question of non-compliance of TDS under the current year.
Yes, sir.
So he cannot make any because it is deemed to be allowed, because the section 4480 says that notwithstanding anything contained in from 30 to 43 A or 43C. So it's very clearly saying that it is overriding all the provisions, which it includes section 40 also. So as an AO, he cannot make any addition to my income, because very clearly that I am offering my income under 4480 and because it is clearly saying that it is from 28 to 43C. They are overriding all the provisions, which include 40. So current year I am offering under 4480. Even though if I am not complied with 194C, he cannot make any addition to my income. Of course, there is a difference, but he cannot make any addition to my income because it is deemed to be complied with. But having said so, here one thing you have to understand very clearly, though there won't be any addition to my income, but what are the consequences for non-compliance of TDS provisions, they will apply. Levy of penalty, recovery proceedings, all these things will come, absolutely will come into picture, but no addition will be made to my returned income because that is a final amount. If I show 8% or 6% or more than that, that is end of the story. He cannot make any addition to my income. There is no disallowance because it is deemed to be complied with. So are there any questions? I don't know why all of you are silent in the sense that am I confusing, am I making boring, or I don't know. But if you have any questions, you can ask. If anybody is having any question.
Sir, instead of getting the accounts audited and maintaining the books, if a person does not maintain the books at all, not at all, then what is the consequences and what is the penalty he has to pay?
Sir, if you are, first of all, are you required to maintain books of accounts as per 44AA? If answer is yes, okay. Then if you don't maintain books of accounts, yes, there is a penalty for non-maintaining of books of accounts. Now coming to the audit point of view, if there is no books of accounts, then there is no question of audit. Here, one interesting thing will come into picture is, since you don't maintain any books of accounts, how the assessment will be done? It will be done only on the estimation basis only. The next criteria is it the estimation is as per 44 AD percentages or any higher percentages? Generally, what the assessing officer will do, he will ask you to present last 3 years or 3 years or 4 years ratios like gross profit ratio, net profit ratio. So based on that, they will conclude and they will come to an assessment. Say for example, he has given notice to submit your accounts, but you have not submitted any accounts. So there is no accounts at all. So then there is no question of audit. The only penalty you can levy is for not maintaining your books of accounts. Now coming to the assessment will be done based on the estimation basis only, and generally it is on a realistic basis, keeping in mind the provisions of 44 AD and ADA. Sir, I hope I answered your query. Or am I clear to you, or you have still any ambiguity on that?
Sir, can you little bit elaborate, sir? What will be the consequences, sir?
Say, sir,
penalty for not maintaining the books is not up to the 273.5% or 1.5 lakhs?
No. First, one thing, sir. First, to get my books of accounts audited, I am required to maintain books of accounts. Right, sir? So
Yes, sir.
if there is no books of accounts, requesting remote control of your screen. Sir, shall I allow this, sir? Secretary, sir, somebody is asking to control of screen.
Sir, what, sir?
No, I'm asking the secretary, sir. Sir, secretary, sir, is there?
Sir, secretary is, sir, I'm only chairman is coordinating, sir.
Okay. No. There is a request for screen. So shall I approve this?
Yes, sir. Which one, sir?
So now we'll come to your question, sir. First thing is, there will be books and there will be an audit. If there is no books, there is no audit. So first of all, are you required to maintain books of accounts? If say yes, okay. Have you maintained? No. So there is a penalty for non-maintenance. Now coming to the audit. If there is no books, where is the question of audit? Because audit is based on the books of accounts only. So there is no books of accounts. Where is the question of audit? So in that case, the penalty of 271B will not arise. Only 25,000 for non-maintaining books of accounts. So how your assessment will be done? Based on estimation only. So there won't be any penalty for not getting your books of accounts audited because you have not maintained any books.
Okay, sir. Thank you, sir.
But we should not use it for tax planning. But generally, this is how the approach is. Since there is no books of accounts, then there is no audit. That is very much straightforward. Now we look at some of the critical things which are there in the 3CD form and as well as income tax return also. These things will come into picture when we are filing the income tax returns for the SSC also, in addition to tax audit. So we know the definition of business and profession, which is very much given in the Act itself. Business is given under section 2 subsection 13 and profession is given under section 2 subsection 36. Okay. Now the first question is, ABC and Company is a partnership firm running a nursing home has a turnover of 47 lakhs during the previous year 2020-21. Can it offer his income under 44 ADA? Please share your views. Yes, it says that yes. Okay. A partnership firm is running a nursing home. The first criteria is, what is the criteria for audit? Is it what is the turnover criteria? The turnover is 47 lakhs. Okay. So he is running a nursing home is a specified profession. Medicine is a specified profession. So is nursing home is a professional entity or is a business entity? Is the only question. If it is a profession entity, then obviously it is very much covered. If it is a business, then no. So how do I know whether nursing home is part of business, or it's a part of a profession? Nagarajan sir, can you you said yes. So can you share your view of how you arrived at conclusion, sir? Now, interestingly, we'll see what the instructions we might have seen that in ITR, but very few of us has seen what is the instruction to the ITR. Yeah, someone has given answer. I will see. All are professional. Okay. Is nursing home is a professional entity, sir? Is the only question. Now we'll see, sir, what is a profession, because 50 lakh rupees is 50 lakh rupees is for a specified profession or for all professions? The 44 ADA criteria that is given, is it for a specified profession? Is for all professions? Non-specified professions also? Is 44 ADA is also applicable to a non-specified profession? Suppose I'm running a training center for CAs and CMS students. Can I offer income from that activity under 44 ADA? Yes, sir. Nagarajan, sir. Yes, sir. Tell me.
Only
Sir.
specified professionals.
Only specified professions, sir. Very good. So in that case, is a nursing home is a specified profession or not? Is only the thing we have to see. So 44 ADA is only covered. If you see the frequently asked questions on ITR issued by the department. ITR 4 is for presumptive taxation. So we are talking about presumptive taxation. That is why I took the FAQ of ITR 4, which talks about presumptive taxation written for Sugam. It says that who can opt for presumptive taxation under 44 ADA. It says that only can be adopted by a resident in India carrying on a specified profession whose gross receipts do not exceed 50 lakh rupees in the financial year. So what are those? Legal, medical profession, engineering, or architectural. So if I am a doctor, I am carrying on a profession, then obviously my profession is medicine, medical profession. But nursing home is also a professional entity, yes. So where do I get this clarity? Because it simply said that medical profession. What is medical profession? Is nurse is also a medical profession? Is now because of COVID scenario, there is a home services, home nursing services are also there. They've opened so many. Is those services are also coming? Is pathological labs or even the labs or the testing laboratories are also covered, because they also coming under the medical only. So these three things which we have to understand from the written. Now look at the ITR 4 instructions, what it says. If you see all these are covered under profession. Look at what they are saying.
Tax consultancy.
Tax consultancy, I'll show you, sir. Yeah, tax consultancy is there. That is also one.
Accounting, bookkeeping, auditing.
Accounting, bookkeeping. Okay, that because specified or in the specified profession, accounting is also there. So we'll see that. Okay, it's okay. Now look at these things, sir. This is also covered under profession only. Nursing homes, diagnostic centers, pathological laboratories, independent blood banks, in the ambulance services, medical suppliers, medical clinics, dental practice, Ayurveda practice, Unani practice, nurses, physiotherapists, and other paramedical practitioners. So medical education, medical research, these are all covered under profession. Okay. And don't be surprised, we'll see further also. And you see that these are also professionals. Primary education. His education is part of his specified profession, sir. It is not there as per that. But look at what ITR 4 instruction says. Primary education services, secondary senior education services, coaching centers. Look at this. Coaching centers and tuitions are also profession. So all CA examination training institutions, IAS training institution, they all come under the profession. This is given by the ITR 4 instructions, sir.
OTR 4 instruction.
Yeah, these are the instructions. You please go through this. I've given the link also, sir. So, and also all the technical. So I'll tell you why I put this for the discussion. You please see the other professions also. Now, so you might be wondering, okay, sir, okay, these are the professions. They say, why should we care about this instruction? We only follow the law. Now we look at this. Now this is also part of the instruction. Below the instruction, they have given the category of defects. It says that if you do this, there will be a defect and it will not be allowed to be moved forward. That means even if you are preparing your return online or offline utility, once you do this kind of a defect, this kind of a mistake, your return will not move forward. That is what this instruction is saying. Now, what that criteria says? It says the category A defects. The title is category A defects. What the defect is. Now they're talking about the defect and they're talking about what is the type of defect. The provisions are 44 AD is not applicable to general commission agents and persons carrying on professions as referred under 44 AA1. So they are talking about only specified profession. For ineligible business codes, please refer instructions. Here they are talking about what is the defect. If you choose 44 AD, what is the defect? In the schedule, nature of business, if you is filled with any of the following codes, then automatically it will be shown as an error. So if I have go for 44 AD and if I have said that I am carrying on business, but unfortunately, if by mistake, if I selected any of these codes, then automatically it will be shown as an error. What are the code business codes? Software development, data processing activities, BPO services, maintenance of action, legal profession, no problem, tax consultancy, no problem, architectural profession, which we have seen earlier. So these are all not business boss, these are all profession. So why I'm saying is because a lot of people are asking, sir, we could not able to, we are getting this error, we don't understand this. And there is one person who is doing this photography, he is a photographer, and he has asked me, sir, is photography is a profession or a business? So where should I look into? So first I looked into 44 AA because it says only interior decorator or a film artist. Within the film artist, the photographer is there, but photography is different. I'm just capturing the photos in the nature photos I'm capturing, or I'm just running a photo studio. So I don't come under the film artist. I'm not a film artist. So in that case, where should I show? Is it a profession or is it a business? So if I show it as a business, it will show error because they are saying that it's not a business. Because the moment if you put business code in any which is falling under this, your return will not move forward. You cannot fill further details. It is automatically will show as an error. So they are saying that these are all professions. So in nursing homes is also a profession. So keep this, because Act is saying something different and the income tax form is saying something different. So which one we should follow? All we know that we should follow only the Act, but that is not going to solve our problem. Because we cannot go and tell the persons who are preparing this and say that no, this is wrong. This is already done, but nobody has raised any questions on this. Because if you really look into, are they really profession? Are they really? Are they not any business? See, the business management consultancy activities, is it a profession or is it a business? Now look at this. Diagnostic center and pathological laboratories, they are considered to be professions. So that is why so you have to be careful, sir, while medical Unani practice, or because I recently I've done this mistake. The person who's one of my client is Ayurvedic practitioner, and I tried to put him under because Ayurveda practice, he has a clinic, he prepares medicine, he sells across the counter. So I had an opinion that, or I had a view that he's doing some business. So the moment I tried to fill it in the business code, it is showing that there is an error. So then I went on to read the instruction where I could found that if you have this, then automatically it will show an error. It is a defect. They're saying that it is a defect and your return will not move forward. So please keep these things in mindset. And also there are certain things which we could not observe, we could not comprehend whether they are really professional or. Now there is one more criteria, and it is also says that if you are a professional, 44 ADA is not applicable for a person carrying on a business, an ineligible code. Now look at what is a defect. if you select business code under 44 ADA other than below, then there is a defect. So they are saying that if you are filing a return for any of these activities, the activities which we have mentioned all, you have to choose only profession only. If you choose business, then automatically it will show as a defect, because they are not business, they are only a profession, because the wordings are different. It says that its code selected business code is 44 ADA is other than the following, then it will show an error. So if any of these activities which I have just referred under these slides for your reference, then automatically you have to choose only the profession, not as a not as a business, even though it is not a profession in real sense, but the return is that is how it has been designed. But unfortunately nobody has really looked into it. So defect, they have also mentioned what is a category A defect. Category defect is something that where the return will not be allowed to be uploaded and error message will be displayed to the taxpayer. So unless you correct it, it will not move forward. So it is irrelevant, sir, what is our understanding of the business or profession. So what the criteria that has been set by the act is irrelevant. So that is why the question which I posed is, if you are running a nursing home and your turnover is 47 lakhs, then as per my understanding, you should not be allowed as a it should not be allowed as a profession, because it is a business entity, which I understand. But as per the return, is saying that nursing home is a profession, and since your turnover doesn't cross 47 lakhs, you are very much covered under 44 ADA. But unfortunately, the fact is, 44 ADA says that only the professions which are covered under 44 AA1 is only covered, but nursing homes, I don't know whether it is really the medical profession or it is a profit entity. I really don't comprehend. But as per that understanding, if you are running a nursing home, which is a profession as per the ITR 4 instructions, you can offer this 47 lakhs under 44 ADA and offer a income a minimum percentage of 50% or above. Absolutely, you can do it. But if you go by the strict interpretation, I think it is still a doubt. Because what happens if it is not so, then automatically if I offer under 44 ADA and it is not suited for this, then automatically the criteria, the entire calculation will change. But fortunately, nursing home falls under the profession as per the instruction. I can offer this income as per 44 ADA. So I want all of you to pay a bit attention to what you are selecting, because many times our students will fill all these details. So I expect all of you to look into this criteria and say and tell them, boss, forget about what is you are thinking. Just go and see. If you see these activities, you put it in the profession. If you see any activities other than that, you put it in the business. That's it. That is how we have to educate our students, and based on that, we will come to correct way of filing a return. And I urge all of you to file returns by adding ourselves as an CA to do the filing on behalf of the client. That is also a good practice. Sir, with this, I think I come to my presentation is I come to an end, sir. So if anybody is having any questions, I would like to answer them. I hope I made some value addition to your understanding, and the time you have spent is worth spending on this presentation, sir. So any questions, I'll be ready to answer it.
Respected members, Any case registered to be discussed, kindly come forward.
Good evening, sir.
Good evening, sir.
Sir, I have one doubt about the deduction disallowancy.
Yes, sir.
Section 40, capital A, subsection 7.
Yes, sir.
For gratuity payment, read with 43B.
Yes, sir.
One of our client is based on actuarial valuation, they are deducted very much, making the provision for last decades.
Right, sir.
Fortunately, last 3 years, there is no retirement announced by the government.
Okay. Okay,
So
sir.
last 3 financial year, they didn't make any provision under 40 capital A 7.
Okay, sir.
So current year, they are allowed to retirement. So last 3 years persons, their bulk retirement is in current year.
Okay, sir. Now they are making payment.
Yes, sir. Before making payment, they have made a provision basis. That's why they followed 40 capital A 7.
Yes, sir. Yes, sir.
So current year,
Yes, sir.
if we making provision of last 3 years, this is allowed expenditure or not, sir?
Sir, first thing is we have to follow the periodicity. So if you are saying yourself, you're saying that this is a expenditure relating to the past years.
Yes, sir. Yes.
So it's a prior period item, sir.
Definitely, sir. Okay.
So it's a prior period item, then absolutely section 37 clearly says that prior period items are not allowed. Only the expenditure which is pertaining to the current previous year is only allowed.
But this expenditure are booked in our books only on actuarial valuation taken by the government.
I completely agree, sir. Actual
Yes, sir,
basis,
yes.
because
there is no retirement at all. There is no retirement at all. So that we didn't pay any gratuity, even a single rupees we didn't pay based on their government order.
Yes, sir. So
this is the Tamil Nadu government order is there.
Yes, sir. So generally, sir.
But there is no necessity. Yes, sir.
Yeah, please go ahead, sir.
Actually, we didn't know any what are the provision is have to be made in books of accounts. So that year we didn't know anything about this because they are making some actual valuation based on their calculation. They are giving the amount in which the proposed gratuity amount have to be paid. So that based on that certification, we booked with our provision under 40A capital A 7. For last 3 years, we didn't get any certificate from government. So we are not making any provisions, sir. But current year, we have to pay including last 3 years. Shall I claim with 43B, sir?
Sir, 43B, see, read with 47. So generally,
yes, sir, definitely.
40
retirement benefits.
Yeah.
Yes,
so
sir. Yes, gratuity, sir. This is gratuity.
So generally, sir, under the Income Tax Act, provisions are not allowed unless there is a section which is clearly saying that it is a provision is available. Say, for example, provision for bad debt. Provision for bad debt is not available to all type of HSCs except financial institutions and banks. So you and I cannot claim bad debt based on a provision.
Yes, sir. Yes, including government department. They never be asked government department also is not. That is the different way, sir. What I asking, this is the provision in which we have to make. We are maintaining last almost 2 to 3 decades. They have maintained the provision basis. But last 2 years we didn't make any provision at all. Shall I go the 43B option? The payment in which made within the due date. Can I take this?
Sir, 43B is only talking about leave encashment. Is it talking about gratuity, sir?
Yeah, I am asking right now. I am asking the gratuity is possible.
No. So 43B, whatever the if we make that argument, sir, we will put that.
No, not the argument, sir. Just
no. I'm only for our understanding, sir.
Fine, sir. Fine.
We will explore that way. So if we say 43B is very much applicable to B, so 43B is only talking about leave encashment. Only leave encashment has to be made actual basis. Then only I'll allow you the expenditure.
Yes, sir. Including insurance or retirement benefit of provident fund like that. We are making
provident fund only, and leave encashment is one of the
other base, sir. Yes.
One of the retirement benefits which we are talking about.
Yes.
Which we are talking about right now, sir. So taking gratuity. So gratuity, if I paid, it is part of my employee compensation.
Okay, sir.
It's in my employee compensation. So employee compensation, I will book under 37 only. So when I make a payment, so that is not a problem. So 40A7 is talking about that we will not allow any expenditure on a provision basis. If you're making a provision, I will not allow any expenditure unless there is a clear-cut provision in the Act which allows the provisions.
Yes, sir.
But-
Yes.
Hello.
So last 2
Yes,
years,
sir. Yes,
we
sir.
didn't
Yes, sir.
make. Yes.
Somebody is saying hello.
Yes, sir. Yes. I think.
Sir,
somebody said-
Narajan speaking.
Yes, sir.
Sir,
Sir,
any
please.
employment, employment salary,
Yeah.
salary
Yes.
and other perquisite.
37,
Yes, sir.
sir. Section 37. sir.
Before at least March 31st, the due is arising. Definitely you should make a provision.
Yeah, see, that is accrual basis of accounting, and periodicity concept is also supporting everything.
Yes, sir.
But 40A7 is saying that if you are making a provision on your own estimate without backed by any actual valuation, we will not allow that provision to be as an expenditure.
But in my
That's-
scenario, there have a actual valuation.
Actual
Given
valuation.
by some other department, certification also given by based on the
But
government.
in that
department officers.
in that certification, they might have said that this is for this year, this is for
Yes,
this
sir.
year.
Yes, this year they're
So-
giving a current year only. They're
So-
giving a current year. They make a current date.
It's a current date for the last year this much, the last year this much.
Yes, sir.
this
Yes,
much.
they gave you
So,
separate
even
three
though-
separate certificates.
Yeah, even though today I'm getting that certificate, it is relating to the last 3 years. only.
Preceding previous years. Yes,
So
sir.
if I book right now as an
Okay.
assessing officer, then obviously I'll put this a question that which you should have done in the last year, which you have not done. It is a, why can't I consider it as a prior period item? Because prior period item is any error or omission in,
Okay.
in the expenditure or income part, which
Okay.
I have not accounted in the books of accounts to which it pertains. So why can't I treat it as a prior period item?
Okay, sir.
What is
Okay.
the answer we have, sir?
We didn't.
So
we
I-
didn't have any option. We can move with some other way, sir. We have to wait for 143 or 2
Yeah.
or 7.
So my understanding, sir, it becomes a prior period item, sir. So
Yes, sir. Yes, sir.
I completely agree with you
But
because
even
current-
prayer period items is we didn't pay any single pay rupees, sir. That is the
Sir-
thing. So if their offer means we didn't pay anything, we are just making our provision only.
yes, sir. Sir, the beauty
Yes, sir.
of 40A7 is that even a provision is enough for allowing
Yes, sir.
expenditure.
Yes.
You need not pay also.
Yes, sir. But what my opinion, my thought also along with your side, sir. Actually, we have to wait for our 143.2 or 143.7. In case any option is there, we can move our ratification or revise
So
to filing.
only if the
Yes, sir.
assessing-
Ratification only in our scope.
if the assessing officer is very smart fellow, then he will raise a question. If he is
Yes, sir.
not, is he not so, then you are very lucky, sir.
Thank you, sir. Thank you for your kind.
Yeah, yes, sir.
Fine, sir. Fine. Thank you, sir. Thank you so
Thank
much.
you,
Thank you.
thank you.
Thank you a lot.
Members, any other issues or doubts?
Sir, only my request is members. So while filing Form 3CD, we have to be a bit careful this year because the assessment is absolutely based on the is completely based on the rule book. So rule book is not what you and I study, it is what is the instructions are given. So that is also we have to consider, sir. So that is also very, very important. Because initially, because of this this gap, the client should not suffer. So that point also we have to keep in mind.
What, sir? Kindly repeat, sir.
No, what I'm saying is what is there in the textbook or in the act and what is there in the written form or instruction form is there is a slight variation. So if we just follow only the act, there could be a notices from the department saying that this is not as per the set platform as per the format which we are expecting you to give. So please consider the instructions which are given in the income tax return, even though they are contrary to our common understanding, contrary to our act, to avoid getting notices at a later point of time. If we want to avoid any notices, you please read the instructions also carefully, and accordingly you do the work accordingly. That is what I'm I'm just emphasizing, sir, because we have faced 1-2 issues. So I am just sharing my experience with all of you, so that if you have any doubt, don't type it anywhere. You just go through the instruction part, then where you accordingly you do.
Okay, sir. Thank you, sir. Sir, I think we are coming to the concluding part, sir. No other member is coming forward with any doubts. Now we take this moment to convey our pleasant gratitude to your participation in this seminar.
It's my pleasure.
On behalf of the Erode branch of SARC of ICAI,
yes, sir.
On behalf of all the members, I wholeheartedly extend my heartiest happiness for your very, very valuable sharing, which is more practical and which is more up to date, and also covering the practical issues, not only covering the matters which has to be carefully taken care of with respect to the present amendments. And also very, very happy to see that you have covered the income tax return parts also, for which we have to give due consideration to avoid the subsequent problems by getting notices for not filing the returns properly, based on our understanding on the basis of the Act. So we are very, very happy, and we convey our happiness and thanks to you, sir. Thank you very much for this very valuable presentation, sir. And also all the members who have spend their valuable time in learning and updating by attending this meeting. Thank you, one and all, everybody. Hereby, the meeting of discussion on tax audit is hereby adjourned. Thank you very much.
Thank you, sir. Thank you, members. I hope I made some sense to all of you. Thank you.